Hey there, it's Ava. Welcome to step 6 of our exhilarating training journey. Today, get ready for an extraordinary session as we unveil one of the absolute gems within the Codecraft system. The purple entry is an exclusive feature found nowhere else in the world. With 24 years of expertise, our expert has dedicated months to coding, bringing forth this remarkable innovation. I am absolutely thrilled to unveil this groundbreaking, earth-shaking indicator to you. Get ready to witness the magic unfold. A potential entry for the bull buy market may be considered when 1. The candle is in close proximity to the ribbon. 2. The ribbon is not flat, in other words, you want the ribbon to move in an upward angle. 3. Both the BP and purple entry point are aligned or close together. 4. There hasn't been a significant wick candle prior to the potential purple entry point. Questions to consider. 1. What stage is the market currently in? 2. Are your higher time frames in alignment? 3. Are the potential target points high? We pose the last question because when target points are high, it indicates volume in the market. Remember, our system tracks institutional money deployed into the market. A possible entry for the bear sell market could be considered when 1. The candle is in close proximity to the ribbon. 2. The ribbon exhibits non-flat characteristics. 3. The SP and purple entry point are aligned or in close proximity. 4. There hasn't been a big wick candle prior to the potential purple entry point. Questions to ponder. 1. Is SP below the entry point displayed as ENP on the screenshot? 2. Is SP below purple entry point? 3. Are your stop-loss indicators within or near the ribbon? Let's dive into practical analysis by examining a recent bull buy run on Nasdaq through a screenshot. We'll walk through the various candles and conduct a detailed analysis. Let's zoom in on the first candle of the bull buy run on Nasdaq. BP and purple entry point aligns just above the ribbon. The ribbon displays non-flat characteristics. The top target points reach 13. A possible entry is evident. Trigger lies below the candle AS, marked by a small blue arrow pointing upwards, indicating strength and volume. Possible stop-loss positions are within the ribbon. The second candles of the bull buy run on Nasdaq. BP and purple entry point is just above ribbon. The top target points are 25. Entry present, showing that market is in stage 1. The trigger below the candle is the AS trigger that shows volume and strength. Possible stop-loss indicators just above the ribbon. In the third candle, BP and purple entry point are positioned just above the ribbon. Both target points have been attained. An entry is present, indicating the market is in stage 1. The trigger below the third candle indicates volume and strength. Possible stop-loss is right on the ribbon. The fourth candle, BP and purple entry point. Candle opened a bit far from the ribbon. Both targets have been reached. The fifth candle, BP and purple entry point is too far from the ribbon. Trigger below the candle that shows volume and strength. The possible stop-loss indicator is far from the ribbon. The target points were not reached. The sixth candle, no BP and purple entry point. Candle opened too far from the ribbon. Run is over. Conclusion. Possible entry when BP and purple entry point is close to ribbon. It's a no trade when the previous candle closed far from the ribbon. Here's a recent example of a bear sell run on Nasdaq. We'll thoroughly analyze each candle in this screenshot. Let's take a closer look at the first candle of the bear sell run on Nasdaq. SP and purple entry point are positioned just beneath the ribbon. The first target was set at 24 pips but hasn't been reached. Possible entry and get ready indicators are visible. The market is currently in stage 2. The trigger above the candle indicates volume only. Possible stop-loss positions are inside the ribbon. Moving on to the second candle. The opening price remains close to the ribbon. SP and purple entry point are both present and aligned. The first target is set at 24 but hasn't been reached. The trigger above the candle indicates volume only. Possible stop-loss positions are just beneath the ribbon. The third candle in the sell run on Nasdaq. SPN purple entry point is closer to the ribbon. The first and second target was reached. Get ready indicator present. The trigger above the candle shows volume. Possible stop loss is inside the ribbon. The fourth candle in the sell run on Nasdaq. SPN purple entry point is closer to the ribbon. Get ready indicator present. The trigger above the candle shows volume and strength. Possible stop loss is inside the ribbon. Both possible target points have been reached. The fifth candle in the sell run on Nasdaq. SPN purple entry point is closer to the ribbon. Get ready present. Indicators show that the run is still in stage 2. The trigger above the candle shows volume and strength. Possible stop loss is right beneath the ribbon. The first possible target points have been reached. Moving to the sixth candle in the sell run on Nasdaq. SP and purple entry point are somewhat distant from the ribbon. Get ready indicator is present. There's no trigger above the candle. Possible stop loss is far from the ribbon. Neither the first nor second target was reached. Now on to the seventh candle in the sell run on Nasdaq. There is no SP and purple entry. Get ready indicator is present. There's no trigger above the candle. Finally, the eighth candle in the sell run on Nasdaq. SP and purple entry point are absent. There's no get ready indicator. The candle has transitioned to a patient candle. Indicators suggest that the trade is over. Conclusion. Possible entry when SP and purple entry point is close to ribbon. The SP and purple entry appeared later in the candle after the opening price. It's a no trade when the previous candle closed far from the ribbon. This means that the opening price for the new candle is too far from the ribbon. In a bull buy candle, the opening price is at the candle's bottom and the closing price is at the top. The thin line, known as the wick, indicates the lowest price at the bottom and the highest price at the top. Conversely, in a bear sell candle, everything is reversed. The opening price is at the top of the candle, and the closing price is at the bottom. The wick displays the lowest price at the top and the highest price at the bottom. Here is another example of the purple entry point. Do you see its best when the purple entry is not too far from the ribbon? Here is another example. The best entry is when the purple entry is close to the ribbon. Ignore purple entries when they are too far from the ribbon after a long wick candle. Also, ignore a purple entry point when appears later in the candle after opening. Let's summarize our key takeaways. Purple entries are favorable when near the opening price and ribbon. Flat ribbons should be avoided. Candles with larger target points indicate higher volume. Avoid entering after a big wick candle when the opening of a new candle is far from the ribbon. Congratulations, you've completed step 6 of your training.